Kotak Mutual Fund is coming up with an NFO, a new fund offer, and Rohit Tandon will be the fund manager. So I thought, what better way to tell you guys about this fund but to hear it from Rohit himself. How do you then decide which stock to buy?
So this fund decides momentum basis earning. Cut everything out, just look at earnings. Earnings leading to price movement, leading to returns is the philosophy on which it is based.
So how do you decide what is momentum and how do you then decide which stock to buy?
When it's a systematic strategy or a factor strategy, the fund manager only decides the boundary. So once he has decided the boundary and he has decided the rule, first top 20 stocks have to be selected, then those are selected. The only intervention can be in terms of how much weightage can I give. But then the weightage is given, back tests are made that this is a strategy which gives alpha, and then it is brought into production.
What is the fund name? What is the fund strategy? Why should people look at it? Why does this strategy create alpha in the first place? Hi friends, this is a very special episode in our podcast series. Today we have Rohit Tandon with us, Senior Fund Manager at Kotak Mutual Fund. And I'll tell you why it is special, because Kotak Mutual Fund is coming up with an NFO, a new fund offer, and Rohit Tandon will be the fund manager. So I thought, what better way to tell you guys about this fund but to hear it from Rohit himself. So there are two Rohits on the call now, just don't be confused. Hi Rohit, how are you?
I'm fine. Thank you for having me here.
Okay, great. So for our listeners, Rohit has more than 20 years of experience in equity capital markets and has done a variety of roles. And at Kotak, he manages a very large portfolio of funds. So Rohit, why don't you tell our viewers about which all funds you manage, and then we can take it from there.
So I currently manage three funds, one of which is the large cap fund of Kotak, which was previously called the blue chip fund.
Okay.
The second is the Balance Advantage Fund, AUM around 17,000 crores plus. And the third is the Quant Fund, which has been recently launched.
Okay. So all put together, roughly 30,000 crore is what you manage.
Yes.
Great. Big numbers, huh? That's simply bolo 30,000 crore. How many zeros? 11 zeros, right? After three. So great. So let's directly jump into why we are here, which is this new fund offer which Kotak is launching, and the dates are starting on 29th of July. Is going to end on 12th of August. So let's directly get what is the fund name, what is the fund strategy, why should people look at it?
So this new fund which we are launching, this is within the active momentum category. It will be based on factors. So as you are well aware, factors are a way of running an investment strategy where certain risk premiums are harvested. Just to make it simple, this is kind of making a portfolio of stocks of the same nature. They may be of different sectors, they may be dealing with different products, but at the same time, if you are looking on an Excel sheet, you will find certain characteristics of these kind of companies common to each other. Okay. Now they might be either momentum, they might be growth, they might be value, etc. etc.
Okay. So I'll just maybe kind of so that I understand it a little better. So let's say you talked about there are various kind of factors. Let's say if I say value as a factor, okay. So just give an example. How will you decide whether that company is a value company or not?
So the best way of understanding value is looking at a price to earnings sort of multiple, okay, where you divide the price at which that share is trading divided by its earnings, and you select, say you select 500 stocks and you select the top 20 or top 30 basis the lowest price to earning ratio.
Okay.
So this would be a
value
portfolio
factor,
which is made up of value.
Now within that, the fund manager will decide which stock out of those 20 or 30 which have been shortlisted. So the first filter will be a quantitative.
I would correct you here.
Okay.
So when it's a systematic strategy or a factor strategy, the fund manager only decides the boundary.
Okay.
So once he has decided the boundary and he has decided the rule that the first top 20 stocks have to be selected, then those are selected.
Okay.
The only intervention can be in terms of how much weightage can I give
Okay.
those stocks. But then the weightage is given, back tests are made that this is a strategy which gives alpha, and then it is brought into production.
Okay. Understand. So now take that and explain to us what this new fund, Active Momentum Fund is the name, what this fund is about. Momentum as a factor.
Sure.
So how do you decide what is momentum and how do you then decide which stock to buy?
Sure. So this fund decides momentum basis earnings.
Okay.
It is important for me to clarify there are two kinds of momentum. One is based on price. जिसका दाम ऊपर जा रहा है उसका दाम ऊपर जाता रहेगा. That is price momentum.
Which is trend following.
Which is trend following.
Okay.
The second way is the earnings surprises which are coming consistently in certain stocks. Those stocks will outperform.
Okay.
So what this is in effect doing, it is trying to look at the entire universe, which is NSE 500 in our case, and it is trying to find those stocks where sell side analysts are raising earnings.
Okay.
And on that basis, we select the top 50 stocks and we then weigh them on the basis of Sharpe ratio, and that is our portfolio.
Okay.
The portfolio is rebalanced every quarter. So every quarter there will be stocks which will be moving in and moving out.
So within the quarter there would not be much change.
Within the quarter, no change.
Okay.
And at the end of the quarter, there is a rebalancing.
Okay, I will just rephrase so that I have understood it correctly. So let's say there are analysts who publish earnings reports. What are the future projected earnings? किस stock पे कितना earnings होगा, क्या growth होगा? So wherever you are seeing that there are positive upgrades of earnings or positive surprises to earnings, those stocks will be part of your universe. And after that, you will put them in some kind of ascending or descending order and then select the top 50 stocks.
Perfect. There is just one change that I will do.
Yeah.
So instead of selecting 5 analysts from whom we are getting data or 2 analysts from whom we are getting data, we are getting market wide data, which we call consensus numbers, and on that basis we are taking the same
So
decision.
किसी एक या दो analyst का bias नहीं है, it is many analysts put together, so more or less it will be neutral.
Agreed. Agreed. And more representative.
More representative, because each analyst will have their own views about rating a stock and kind of treating the earnings. Okay.
What you are saying is a very important thing, because in a typical discretionary strategy, what happens is that there is 1 or 2 or maximum 3 analysts that you can look at or speak to for a particular stock.
Yeah.
But here you are looking at the entire market as a whole. So that is why we say in factor strategy, human bias is mitigated by using quantitative parameters or mathematical parameters.
So I understood the kind of the fund methodology correctly, that take a market view of analysts where whichever stocks are going to have earning growth or earning surprises, take those stocks and then construct a portfolio, balance it on a quarterly basis, because earnings तो quarterly basis पे आएंगे, तो भी जो भी changes होगा analyst के report पे उसके basis पे होगा. So this I have understood. Now tell us, why is it such a great strategy to invest in?
So first of all, what we have done is we sort of worked on this philosophy. We introduced parameters basis which this kind of earning surprise is sort of calculated, because there are two things. One is an earnings revision, which is like a creep. हर बारी earnings बढ़ती रहती हैं किसी stock की, and there can be something like an earning surprise which might just be a one-off. कि you sold something, you bought something, you did this. So there has to be something which is replicable, which is structural. So we introduced, parameters to ensure that this is, this is something structural. So it is something replicable. So that is number one. Number two, this is a quantitative strategy. It doesn't have any biases. Third, it is well structured. And fourth, in our back tests, the returns versus the index are impressive. The alpha versus the index is impressive, and even versus NSE momentum also, the returns are impressive. So therefore, we believe that earnings momentum as a strategy is worth having for somebody who wants to invest in systematic strategies.
So Rohit, I understood this part, that you've done back test and obviously you are satisfied and that is why you're launching this fund. But my question was something more fundamental, that why does this strategy work, or why does this strategy create alpha in the first place? So that was my question.
So, I mean, if one is looking at a very sort of very simple thing,
Yeah.
say from COVID on times to now, the Nifty is up around 1.5 times.
Okay.
And earnings of Nifty are also up, say 1.5 times. Go to a bigger benchmark, say NSE 500. There the NSE 500 since COVID time is up around 3 times.
Okay.
Earnings there also are up 3 times.
Okay.
So market multiple or market multiple re-rating can take you just there. Finally, prices or returns move in line with earnings.
Yes.
So as long as there is earnings growth, there is growth in price, there is growth in returns.
Okay.
So that is the philosophy that it is dealing with. So cut everything out, just look at earnings. Earnings leading to price movement, leading to returns is the philosophy on which it is based.
Okay. Okay. And so essentially the bet here is that if you pick stocks where earnings momentum is good, over a period maybe the multiples will also get re-rated, and that's how you will make that extra juice out of a stock, right?
If you get multiple re-rating, it's even better. But at least it will move in line with earnings at least.
Okay, okay. And you said that this will be a multi-sector kind of a portfolio, but again, wouldn't there be some inherent weightages which will come, let's say, how do I put it? Some sectors tend to outperform others, and obviously it is cyclical. Some time back it was pharma which was doing well. Maybe now banks will do well. Some time back IT was doing well. Right now not doing so well, etc. So at any given point in time, would there be an inherent sector bias in the portfolio because of how that sector is performing?
So when we did again our back tests, and back tests are very important for any strategy which is based on data of the past, there was no great sector bias. I mean, it's not that, financials totally get excluded, totally get included, the overweight increases significantly. That sort of a thing didn't happen. That is the way we have built up our model.
Okay.
On the other hand, yes, if there is a positive earnings momentum in certain sector, then the weightage will increase. But that is natural.
And actually, we would want to be in such sectors where, the momentum is in their favor.
Sure.
Yeah. And Rohit, you just, sometime back you mentioned that versus other momentum funds, in backtest, at least this fund is showing alpha. So what is the difference between a, let's say, price momentum fund, which generally, most of the funds which are available in the name of momentum, they are price momentum funds. Yours is an earnings momentum fund. So what is the difference? If you can just kind of explain it simply.
Price momentum is price ऊपर जाता जाएगा, आप लोग और लेते जाइए. And the thought process is कि price is a behavioral sort of attribute. मतलब the market immediately doesn't react to an information. It reacts slowly to an information. So if the price has started moving, it will continue to move for some time. But the problem is, with all this explanation is fine and it's okay for having an academic discussion on it. Practically it becomes very difficult to understand it, especially when regimes change, when market structure changes. It becomes very difficult to understand. Matlab, why did I buy momentum stocks? Simply because the price was moving up. It sort of looks here in this fund, because it is based on earnings momentum, which is easier to understand. I think even for the client customer, he can understand. If he believes in earnings momentum, he can look at it. So you can explain it in good times, you can explain it in bad times.
One differentiation which comes to my mind based on what you just said is, if I look at price momentum funds, they are slightly more technical in nature in terms of trend following, or how the stock is looking on the charts. Here there is a fundamental attribute also, because if the earnings are not doing well, price के हिसाब से कितना भी अच्छा कर रहा होगा stock, you will not buy that stock. So there is a fundamental cushion available to the stock which is there.
Agree.
Okay. So I think this differentiation makes it simpler for me to understand that one is largely technical, price momentum. Earnings momentum has an element of your fundamental attributes
Very
of
true.
a stock.
Very true.
Okay, understand. So now I'm somewhat clear. And yeah, so uh, one question many investors ask us, and hence I have to ask you also, that why now? Is this the right time for this scheme? Okay, so as we know that all strategies do not work in all market conditions. So is this the right time for you to launch this NFO and for an investor to consider this NFO?
So, as far as all these factors and all are concerned, there is a certain risk premium or there is a certain alpha that they are supposed to give on an annualized basis, but that doesn't happen. Some years you get much higher alpha, sometimes years you may not get that much high. It might be lower. The point is, when we were doing our back tests, when we got into a product which sort of gave a good sort of deal, in the sense that the Sharpe ratio of this product is 1. Once we got confirmation and once we were able to convince ourselves that our back tests are good, that is when we are launching this fund. We would want investors to look at this fund from a long term perspective.
Okay.
It's not a short term product.
Okay. And in terms of churn, you said it will be rebalanced only once a quarter. So
It
the
is
churn ratios will be much lower in this fund.
Churn ratios are a bit higher in quantitative funds.
Yes.
So, there might be other stocks which might come up, which might have a better sort of signal.
Okay.
And then you have to reduce, because some factors get stale after a certain point of time. So you have to do this sort of harvesting.
And within that factor also, some stocks, let's say, are giving stronger signals, so obviously they deserve to come in the portfolio versus the others.
Sure.
Okay, got it. So, Rohit, little bit about your experience. More than 20 years you've spent. So, why don't you take us through your journey? What all you've done in capital markets?
So I started with JP Morgan on the sell side.
Okay.
I was part of their infrastructure research. And
you started which year?
I started in 2004.
Okay.
Immediately out of B school. And then, in 2008, I moved to Gurgaon with Max Life. So I was there till, recently, 2019.
So it was in their fund management team only?
Fund management.
Okay.
Yeah. And then I moved to Nippon Life, where I was head of equities.
Okay. Nippon Life, head of equities, then Max Life almost 12 years.
12 years, yes.
Okay. So and here you are managing 30,000 crore of our investors' hard-earned money. So big weight on your shoulders.
And thank you so much with your support.
Yeah. No, so the thing is, obviously, Kotak is a well-known brand now, 5th largest mutual fund in the country, obviously very ably led by Nilesh Bhai. But in terms of the bouquet of products that Kotak Mutual Fund offers, and there are a variety of funds, there are actively managed large cap, you manage large cap, there are small cap, mid cap schemes, etc. Flexi cap, Kotak Flexi Cap is a very big fund. What I found kind of a little bit more interesting about this scheme is the element of human bias is limited at the time of designing the product itself. So once the product is designed, after that the element of human bias is somewhat limited, and hence that the thing is that, like you said, that each factor has its course, and its each fund manager also sometimes has its course. Although form is temporary, class is permanent, but fund managers also go through rough patches of form. And if you follow more quantitative strategy, if I may say so, the element of at least the fund manager bias is reduced. There is still a possibility that the factor might underperform during periods. We have seen that growth versus value, this debate happens of late. In the last 2 or 3 years, value was doing very well. Of late, it has kind of tapered down a little bit. In the 3 years preceding that, growth was doing very well. So there are times when a certain factor also will, kind of underperform. But you are saying that in your back test, you feel that this factor is a decent enough factor to look at.
Sure. So, factor rotation and all these things will continue. our aim is to ensure that over a long period of time, there is a good amount of alpha that investors get. And the point of having funds is that there should be funds which should be tailored to the needs of investors. So investors have even equity investors have a differing sort of risk tolerance among themselves. So there might be people who can look through our material and they might find the risk tolerance sort of appealing. Within that, I think that for investors who are into discretionary strategy, they should also put some weight into systematic strategies or factor strategies or quantitative strategies. The reason for that is exactly this, that it is a machine or it's a tool which is taking the decisions and not a fund manager. It ensures that discretionary and systematic are not correlated to each other. And over a long period of time, it helps in better investor
It brings
outcomes.
a better balance to the
Exactly.
portfolio because these kind of strategies are somewhat new in India as of now. So most of the investments which most of our listeners or maybe even myself have, they are in your traditional actively managed funds. So this brings a novelty element as well as somewhat of a counterbalance also to your portfolio, that
Very
okay,
true.
some part of the portfolio, I do still believe that humans, at least in Indian market context, humans will do a better job of creating alpha, but why not have some part of your portfolio in a machine driven kind of a setup? So it makes sense. Great. So that's all from our side, and this NFO is getting launched on 29 July, ending on 12th August. So please do consider investing, and would be happy to hear from you. If you have any questions, please put in comments, and someone from our team will get back to you. So thank you, Rohit. Thanks a lot, and all the best.
Thank you so much.
Yeah.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.